that you have maybe seen recently will definitely lower.
Is being recorded.
Excellent. Some of the crashes should definitely lower any kinds of hype projects, and we should really get down to the meat of some proper solutions. With that going forward, I'm very excited to begin our 4th consecutive November Unicorn Pitch Network competition. Thank you so much.
Yeah, hopefully all the judges connected, despite of the yet again exciting news in the crypto industry. So I welcome today's judges. Dr. Lenz is an experienced executive lecturer and scholar in the field of banking and capital markets. Jimmy is the director of the Master of Engineering in FinTech and the Master of Engineering in Cybersecurity at the Pratt School. He started 25 years ago as a trader and grew in the ranks to Chief Risk Officer, Chief Credit Officer at top 3 broker-dealer firms on the Wall Street. And I really liked Jimmy's latest research paper, from which I really derived a good thing about crypto market, that the FOMO effect in crypto is actually different than the FOMO effect in the real world. FOMO is when, someone is making money and I'm fearing that I'm missing out. I want to make money. But in crypto, it's the other way around. So everyone is losing money. So I'm thinking, hey, maybe it's a good time to jump on the bandwagon and enter the market. And that's backed by the research. So thank you, Jamie, to join us. Maybe a few words to the startups.
Sure. No, I'm always glad to take a look at new ideas. I have the opportunity to see startups, VC pitches on a fairly regular basis. I will warn you that I am pretty critical, so don't take anything personally that I say. But I've seen a lot of ideas come my way, and so I have a good time doing it, but I will be somewhat critical. I use a lot of my experience in industry as my benchmark, and so my take might be a little bit different from those that you speak with that are purely academics. Thanks for being here.
Yeah, thank you, Jimmy. And if you listen to podcasts, join Crypto and Coffee podcast tomorrow at 10 a.m. that Jimmy and Lee Reiners are hosting. Quite an interesting podcast. And thank you for the critical view. Startups need it because it's time to build, but what are you going to build? Right here, we're going to discover that.
Absolutely. Yes, thank you so much, Dr. Lenz, for joining us. Pleasure to meet you, albeit online. And again, if you guys want to catch some of the latest crypto news, I knew Dr. Lenz and Dr. Reiner, they do a coffee and crypto chat on YouTube. Very cool podcast. Highly recommend. And with that, let's move forward to one of our next judges, Adam Mastrelli, a partner at Woodstock Fund. He is focused on Web3. He is a Duke alum, and he's going to build blockchain experiences at IBM. He is going to unlock all the secrets that you might hold. Trust me, if you need to know any other information about such an interesting individual, there is Google. You can Google him and you'll learn a lot. Thank you so much for joining us, Adam. If you'd like to say any words for our startups this month?
Not right now.
All right, we'll save the best.
I don't want to follow Jimmy Lenz, dude. I was a TV show host. It's not an easy setup, bro.
Sorry for that, but we did pick the best possible person who could have handled that.
Dude, Jimmy's hair is glorious as well. Just glorious.
Absolutely legendary.
So good.
Excellent.
Legend.
All right. Thank you, Adam. Moving forward, Ming Duan is Web3 enthusiast, Duke MBA alum, partner at Mbushi and Argonautic Ventures. She's co-founder and COO at Umi, which is a cross-chain DeFi hub for connecting the overall blockchain ecosystem.
She's also not connected, I believe.
Yeah, she will join us later.
Excellent. Excellent. I was going to try to give her the spotlight for some words here, but
absolutely.
She'll join us when the time comes.
Yes. So next one is KJ. You want to introduce him?
Absolutely. KJ is a Duke alum. Well, I guess he's more of a Duke dropout. He was here. Last year was his first year. He was very involved with the crypto space, has some experience working over at Ripple, has developed now up on his capital and has dropped out of Fuco to really focus on developing the Web3 space and the blockchain space in general. We're very excited to have him here, and hopefully he'll not have to come back one day. But good luck, KJ, with what you're going on to. We miss you, and we're excited to have you.
Wonderful. So next judge is Vitaly Tan. She's a Duke alum. She didn't drop out. She is a partner at the Lando VC, focusing on zero knowledge proof.
Yeah, I love zero knowledge proof. Very excited to have her. It's some cutting edge technology, and hopefully one day the government understands that they don't need to know how something works to know that it works. Moving forward, we are introducing our very own Sujay Alluri. He is the president of the Duke Blockchain Club, has some experience with working in financials as well. He's either going to find the new Coinbase or very much launch his own very popular DeFi protocol. Very well into the space, doing research alongside myself with Dr. Harvey in the NFT space, and very excited to hear from him. Thank you so much.
Absolutely. And last but not least, Frank Valela, Fuco Blockchain Club president, second year MBA student. He's definitely going to found a unicorn in Web3 credit rating sphere. So with that, without further ado, thank you today for joining. We have an interesting lineup.
Yeah, absolutely. Like I mentioned earlier, FTX may be a bust, Alameda may be insolvent, but this is just going to open room for some real projects and some real solutions to make way and show themselves up. Now is the time to find the next great solution.
Yeah, the best companies are born right now. So some housekeeping rules. So every startup will have 3 minutes for each. You will see the timer in the Zoom, and you will hear at the end of 3 minutes this gong. It's quite annoying. If you don't hear it, I will repeat it. You will have 5 minutes for Q&A. Your judges allow you to spill over the 3 minutes all the time. Please ask for that. Judges, you should have all your links for the voting. You can start voting as you hear the speeches and then change it. Before I press the button, that voting is done and we can announce the winners. And for the rest, yeah. By the way, Javier, do you have some Duke Blue Devil tokens?
DBTs, no, I do not have some Blue Devil tokens. I need to mint.
Why is that? Why is that?
I have not had the opportunity to mint them quite yet.
Yeah, I think we need some liquidity provider, because I want to purchase, no one is selling.
Absolutely.
There should be some liquidity out there on the market. And I think our next startup each year will tell us all about the liquidity. So let me set the timer. And we'll hear.
Hey, you can't start it until my screen pops up.
Absolutely. Let me. Are you sharing with us now? Excellent.
No, the time for popping up the screen is included in 3 minutes. So.
All right, Ichi, thank you so much.
Hey everyone, I'm Brian Gross. I'm one of the co-founders of Ichi. I feel just grateful to be here today for a lot of reasons. One is that I didn't have money on FTX. Second, that I'm the only one that gets to present in person. And third, because we actually have the solution for what ails the industry. We know that we're relying on these shaky centralized exchanges. And we know that last week, Uniswap V3 had more volume than any centralized exchange. But we also know that all of that volume, 90+% of it, was with just 15 tokens. And we know that the industry has a lot more than that. There were many more than that listed on FTX. So why did Uniswap not have thousands of dollars of trading activity on hundreds of tokens last week of all weeks, as people were buying ledgers and rushing on chain? The answer is that Uniswap and all other AMMs were designed for the wrong user. I say right here, they were built for liquidity providers. It's actually in the name automated market maker. Liquidity providers are a very unique financial entity. They want to take both sides of a trade. They want to create bid orders and ask orders and profit on a bid-ask spread. that business model is low margin, high speed, highly competitive, and unsuited for a blockchain, especially unsuited for this 0 to infinity price curve where I naively offer up my capital at any price the market decides, and arbitrageurs pick their pockets. That's why you can only get good trading experience on 15 tokens on Uniswap v3. We decided to take a different approach. We didn't build for liquidity providers. We built for people who simply have a token. Now, fortunately, 95% of tokens are just sitting in wallets and the people holding them are hoping the number goes up. They aren't liquidity providers. They have a token and they want more of it. Look at all of these other UIs, and every single one, you can deposit multiple tokens and get back the same receipt, the same ticket, the same share of that liquidity pool. With the Ichi UI, you just put a single asset in, and when you're done and you want it back, you get more than what you started with. We've launched with 30 vaults, 30 different projects, and all of them have returned more tokens to the depositors than what they started with. This is because the system is designed to keep your long exposure to the token rather than sacrificing it to impermanent loss. That works by keeping the asset, the single asset that you put on, in close to the price, not overselling it, and earning a lot more. Thank you very much.
Yeah. Thank you.
Great 3 minutes.
So, yeah, perfect timing, 5 minutes for the judges to ask questions, give feedback. So please unmute yourself and.
Yeah, quick question. So arbitrage is the lifeblood of any market. You are clearly trying to create a new paradigm in markets. Why do you think this will work?
It relies on arbitrage. We're not eliminating it. We need arbitrageurs to update the price in the AMM. We just think they should get paid less than $1.2 billion a year. Maybe they'll do it for 50 million.
I don't know. If I look at listed equities, for instance, in the United States, the probably most robust market there is, it's dominated by 7 high-frequency traders that are automated market makers, right? That's what that's a market that's over 100 years old. That's what it's come down to.
Are the liquidity providers profitable in that market?
I think Citadel, Virtu, GetGo, they're pretty profitable.
Correct. Liquidity providers put capital at risk. When you put capital at risk, you expect a return. Liquidity providers made $1 billion. The arbitrageurs made 1.2. Taking that from the liquidity providers, that's overpaying them. We think arbitration should exist, but they're going to make a lot more money if the liquidity providers are actually profitable.
Okay, thanks.
Thank you.
Excellent. Any other questions from our esteemed judges?
Yeah. Hey, Brian, can you just walk through the anything, and full disclosure, Ichi is a portfolio company of mine. So can you walk through the back testing aspect of what you've been testing on vaults and just kind of walk through that?
Yeah, we built a Uniswap backtester that would replay the entire state of the chain since Uni v3 started. And we used that to determine the parameters that are most likely to work in maximizing income and maintaining long exposure to a deposit asset. It continues to get refined over time. Thanks.
All right. Thank you, Adam.
Fantastic. Any other questions before we move on to our next pitch competition of the day?
They have to ask 5 minutes of questions, but I only got 3 minutes to talk.
Absolutely.
No,
I understand. I do have a quick question. It might be some misunderstanding on my part, but how exactly are you holding the funds and generating this return for your customers? You're not off investing in like SBF.
No, we don't hold the funds. Yeah, they have to use their own keys to access the contracts. Only they can remove their funds. We can't spend them. We can't do anything with them. And I think that's the way it should be. completely non-custodial.
Excellent. Any final words you would like to say for the judges, since I guess you do have some extra time?
The last part that I would add is we aren't the typical DeFi team. If you look here, well, my screen's not showing anymore. We have 4 or 5 people from IBM, people from Microsoft, Red Hat, Amazon, myself. It's a very senior team. Most people have 15+ experience in their field. We like Monday morning meetings and we get a lot done. So hopefully some of you will back us on this journey. Appreciate it.
Thank you so much. I personally do not like Monday morning meetings, but I'm sure you will find your audience.
Thank you very much.
Thank you.
Yeah, thank you. Javi, quick question before we move forward. I just started to learn about all this fungible, non-fungible tokens. Have you heard about semi-fungible?
No, I've only heard of non-fungible, and I only learned the word fungible when the word non-fungible token became a thing. So definitely not aware of semi-fungible.
Okay, so that's why we have here Zendesk, who's gonna tell us about semi-fungible commodities trading, which is really a thing. So
Fantastic. Let's get their presentation up on the board.
yep. Sam, please.
Hi guys.
Excellent.
You have 3
Thank you so
minutes,
much.
and 3 minutes are on.
Just give me a sec.
Absolutely. Your time begins as determined, however, but we're sure you will wow us with Palmyra. Hope I
Can
said
you
that
guys
right.
see the slide?
Yeah,
Yes.
we can see. Yeah.
Okay. Okay. The production and trading of commodities goes back thousands of years, predating that of stocks and bonds, and has had a huge influence on the way our communities, economies, and businesses have prospered and connected together. The world today has a multi-trillion-dollar commodities market and is projected to exceed $5 trillion by 2026. Over the past few decades, the digital transformation wave has swept right through the world, including the commodities sector. However, these benefits have not been spread equally in scale or pace, with many multi-billion-dollar plus commodities remaining technologically and financially underserved. My name is Sam, and I'm one of the co-founders of the Palmyra Comdex. My background is in the management consulting space, where I spent many years advising financial institutions across the world, across topics from credit strategy, risk management, and regulation. My co-founder, Dan, who's unfortunately not able to join today, was part of the founding team that built Cardano, Cardano's ecosystem. Our solution to the original problem statement is the Palmyra Comdex. It's one of the world's first physically settled tokenized commodity exchanges powered by the blockchain. We have a specific focus on emerging markets, opportunity inclusion, and semi-fungible commodities that have limited access or no access to traditional exchanges and marketplaces. Palmyra aims to add value to these markets by building infrastructure to provide global access and connectivity between stakeholders across the entire supply chain, from production to delivery. Our business model is designed around transaction fees. The tokenized commodities are represented by NFTs with traceability information embedded and updated along the way. We will begin by first building out a physically settled spot market to facilitate the wholesale buying and selling of these commodities. This will allow us to then build a futures market, which will allow a whole new range of users, from investors to speculate on new assets and businesses to hedge their risk. Our goal is to cut costs by providing greater transparency and increase traded volume by opening up these markets to global access. We're about to kick off 2 pilots in Southeast Asia before the end of the year.
Time is over.
Okay. Thank you.
Thank you so much, Sam. Very interesting stuff with Palmyra. Any questions from our judges?
What commodities? First
Yeah,
of all.
so-
I wanted to know that too.
Yeah, I was about to get to that. So, you know, you guys are probably all aware of the main commodities that tend to be traded on existing markets like oil, energy-related metals. We're targeting what we like to define as semi-fungible, and these tend to have more variety. So one of our pilot customers that we're about to sign on is the Sri Lankan tea market. So tea is a quite fragmented market with lots of different varieties. So Sri Lanka, for example, they focus on Ceylon tea, but Ceylon tea itself has lots of different sort of segments based on things like, you know, elevation, where it's grown, etc., how it's processed. And because it's so fragmented, they haven't actually been able to standardize it or, you know, provide liquidity or, you know, be able to actually open it up to, you know, global access. So basically things with varieties is stuff that we're focusing on. So that could be anything.
So
tea,
yeah, I mean,
gold.
so I think it's an interesting concept, but it's not, you know, that's not really feasible for a liquid market. I don't believe for a number of reasons. So I'm really familiar with commodities, in particular futures derivatives. This is an area that, you know, I see what you're, and there is not a tea future, I don't believe. I mean, there are coffee futures and things like that that tend to be, you know, a little bit more genericized. But you can say every commodity has certain nuances. Oil has certain nuances, right? But we don't buy it that way. So what I'm thinking is, or what I'd like to know, you know, kind of, and how you guys are thinking about this, you have to have a secondary market to do this, and you would have to create derivatives on this so that people could actually hedge this out. How would you do that with this? You know, if you break this down into, you know, you know, by farm or by location or something like that.
Yeah, so I can give you an example around tea. So you're exactly right. There's no such thing as a tea futures, which doesn't allow people to speculate on tea assets or even like the people in the business to hedge against price volatility. So the way we're trying to focus on it is by using NFTs, we can sort of capture parcels at a certain granularity. And in our case, it's likely to be, at least at the end of that particular value chain, a certain type of tea at a certain type of elevation and potentially a certain weight. But once you're able to modularize that certain standard, you can basically build it up in a way. So if you want to trade like, you know, a ton worth of tea, you can do that across a certain time frame. Some of the commodities that we're targeting are also less perishable than others, which allows us to actually put it into warehouses, which adds like an extra layer of standardization.
So I would say you know, I mean, it's a really interesting idea. Don't get me wrong. I think this is kind of a cool idea, in particular for those very few commodities, and there are only a few that don't really have futures that trade against them. But I think, you know, from a derivative standpoint, you know, from, you know, trying to issue a future or something like that. I mean, the idea, just the fact that you're using an NFT, a non-fungible token, you know, it speaks to a unique nature, and trying to create a derivatives market on one thing would be extremely difficult. I mean, you would never find, it would be very, very difficult to find market makers who would actually make a market in something like that, because you could just never earn back, you know, what it would cost you. I would just say look at it that way. I think it's a cool idea, but I think you can only get so micro and expect a secondary market to develop.
Yeah, no, I think that's really good feedback. And one of the other things that we're at least focusing on is building out the spot market. So a lot of these markets really don't have enterprise software solutions. Like the Sri Lankan tea, the tea market, for example, up until COVID hit, we were doing everything on paper. So twice a week, there was a tea auction held in Colombo, and it processed around 80%, 85% of all export volume. So, you know, some of these places really need sort of infrastructure to help the buy and sell, even at the spot market. Yeah.
So Sam, if you want to get more questions, we have time for just one little question from judges, if there is a clarification. If not, I would really like to buy some futures because I like tea, and it's hard to get a really good Earl Grey here.
Yeah, I wonder how far it goes. Tea, ketchup, mustard. That's what I thought of commodities.
It started with the X, you know, in Chicago. So, gosh, I really hate to bring this FTX case again, but I really hope the guys, you know, trade on chain and don't hold those private keys and invest here and there into startups that don't have good tokenomics or just not sustainable without this FTT flywheel. But hey, let's hear from Aspis. Aspis has some tools for trading on chain, so VCs could get on chain, hedge funds could get on chain, right? Vlad, will you enlighten us?
Yeah, hello. Can I share my screen?
Yeah, we can hear you.
Cool. So I'm starting. Hello, everyone. I'm Vladimir. I'm founder of Aspis Protocol. So Aspis Protocol is a platform for creation, fundraising, and governance of the decentralized autonomous funds, aimed to manage relationship between capital manager and investors by transferring logic behind legal term sheet to the smart contracts. So basically, we're replacing the old term sheet with the smart contracts and making contracts more smart. Today, Aspis is presented by me. Here you can see our team. So we are 8 people right now, half for the development, half business, with the experience in management consulting. So what do we do? If you will look at the left part of the slide, you can see how things are mostly working right now. During our experience with crypto market, we worked a lot with fundraising for startups and trust management issues, and we operated our own crypto exchange. So if you look on the left side of this slide, you can see how things are mostly working. Using current tools is expensive, takes a long time, and still doesn't prevent main risk. Safety mechanism, backward looking. So instead of punishing the bad actors, it's a good idea to not to prevent the fraud in the first place. And now imagine that side on the left. So all the relationship between the manager and investor are managed through the on-chain agreements. Basically, this is a set of smart contracts which manage and combine all the basic rules for the investment, like on capital onboarding rules, like who can deposit, which currencies and which sizes, capital offboarding rules, what are withdrawal windows, withdrawal execution time, rage quit fine, controlling rules, which assets on which DeFi or DEXs manager is able to purchase, what monthly spending limits, and so on. So investors have the transparency and control over what is happening with their own funds. So basically, our platform from the user side consists of 3 main parts. So it's no-code DAO constructor. This is like to create legal entity on chain. The second is DAO Launchpad, and the third is governance toolkit. Every DAF created in Aspis has its own token representing ownership of a part of the treasury funds and gives voting power to change parameters into the structure that can only be obtained through the depositing liquidity into the DAF, similar to how Uniswap LP token works. We also have the Launchpad, so each DAO can fundraise, and also governance toolkit, so everyone can make actions which are irreversible and on-chain. So every proposal is happening on-chain, and every decision being made by the governance council is changing the parameters of the smart contract, which are simply variables which are happening on chain. So here is like a couple of slides about competition. So we are not alone into the market. There are like 3 main players, which is Syndicate, XDAO, and Wheezy. See if Syndicate is focusing on angel-based regulation, like AngelList, like not on-chain governance, but regulation. XDAO is something similar to what we're building, but haven't got focus on asset management, and Wheezy doesn't have the UX and UI, and it's just a set of multiple products, which is pretty not user-friendly. So basically, to wrap it up, I would like to say that we're making DeFi market more simple and allowing professional managers there. Thank you very much for the attention.
Thank you, Vladimir. Very cool stuff. Any questions from our esteemed judges?
Hey, yeah, sorry, can I jump in? Can you just walk through DAO to DAO governance and some of the challenges there? I mean, I get this concept, but what is that? Can you break down DAO to DAO governance for me?
Yeah, sure. So basically, when you're holding the part of the tokens of the DAO, which basically has the tokens of another DAO, So you can participate in voting into another DAO when combining the all, let's say, shares on your parent company, which holds the child company, and by having this voting in the parent company, you can influence the child company. But I mean, this is like the second part of our development. So right now we're just created the MVP, which is just decentralized autonomous funds without DAO-to-DAO governance right now.
Okay, thank you.
So basically, at its core, you're trying to allow an investor to look through what their money manager is doing, and see, whether it's crypto assets or any other kind of asset. You're trying to kind of create some parameters that the money manager has to operate in.
Simply answering your question, no. So I'd like to start with, so the concept is that you have professional money managers and you have the retail investors. So in retail investor, like for example, invest in some manager who is managing their funds. So what we're actually doing is we have the investment term sheet, which have the rules for like who can invest in which sizes, who can get in, get out, the fees, the controlling rules, like how the funds can be deployed. And all of this we're bringing on chain. So investor is buying the share in a fund, but this share guarantee him the liquidation rules. So in case the DAO will be liquidated, he can get off his liquidity. Or if he wants to get out of this DAO, for example, he can burn his DAO tokens. And we're using the withdrawal windows. So for example, you can withdraw without the fine each like first 3 days of the quarter. So in this case, this allows the rebalancing of the capital for the manager. In target state, we will not disclose the information about the trades, but we will use the zero knowledge proof. So the DAO will stay private only for members of the DAO, and manager will be partially disclosing the data to the investors and all other market participants. And at the same time, this will be signed up with the ZK rollup, making sure that the data is accurate, but is not shared openly.
Yeah, I mean, it honestly, I mean, I'm very familiar with how money managers work, and even money managers hired by retail investors. I mean, that's pretty common in retail brokerage firms. If you have enough money, you can invest in those kinds of things. I mean, it seems like you've made it massively complicated. I really don't get the insertion of the DAO and the liquidity functions there. I mean, most money managers take money for a contracted term, right? Not 30 days or not a month, because it causes too many problems. I mean, it seems like you've added like layers of complexity rather than the opposite here. What am I missing?
I can address your first point regarding the rebalancing of the capital by the manager. So right. First of all, there might be implemented lockups for more than this period, and during these lockups, investor maybe not be able to exit. And at the same time, we gave this like rage quit for the security reasons, because if there is like fraudulent transaction happening or something is hacked, investors should always be able to withdraw the funds. But this rage quit fine, which applied to the body of the capital, basically have no motivation for the investor to take the capital earlier than the redemption date will happen. So regarding the complexity, this is the second part. So the first who tried to build similar project was Vitalik Buterin. He launched the DAO, and this is the reason why the hack happened and the network got forked into the Ethereum and Ethereum Classic. And basically this concept is quite old, and if I'd like to explain it simple. So what we do, we just bring the possibility of the computing and programming the contracts into the smart contracts. So
thank you so much.
So making Vladimir. Financial contracts like smart. Thank you.
Excellent. No, thank you so much, Vladimir. Very cool stuff there. hopefully we can, again, education is one of the biggest drawbacks to cryptocurrency, so maybe we can understand a little more how your DAO adds simplicity. But we have to move on now to our next project. And I just wanted to ask you, Sergey, how are all these NFTs going to be centralized and all of these systems centralized if everyone's using AWS as their servers?
That's a good point. Everyone is talking about layer 0 or layer before that. It's like, how can you be truly decentralized if you're using one provider to host all your nodes? Well, we have Exhibit today who's going to share some ideas on how to tackle that problem. So please, guys, the timer is on. The floor is yours.
Who is?
Exhibit. Do I pronounce it correctly?
Are they still connected? I
Let's
was really excited to learn about this because even I myself am looking into the differentiations between an IPFS, AWS servers. I mean, the IPFSs are substantially more affordable than AWS servers, but intrigued to look at some of the limitations in scalability and transparency and true custodials. So hopefully we can get Exhibit on. Now we'll have to see.
Is Zach here?
It does not seem like we have a Zach connected.
Okay. And then I guess DeFi summer is postponed if we don't get decentralized storage. Well, anyway, right? This is a real world application, but like Reddit, Twitter, Instagram, they all have these NFT collections, and it's like overnight that Reddit created $100 million worth of like giveaway NFT. So there must be this thing about social media platforms and all the buzz around that. And in fact, we have 2 projects that are tackling that problem. I would say 3 projects. So it's really time to embrace that. So not to confuse, the first one is OI Network.
OI Network. Let's get prepared our screens to see what OI Network has to say. Again, exploring social media and really what it means to have an online presence, an online profile, dare I say, an online identity, whether it be social, financial, or for another purpose.
Yeah.
Do we have OI Network?
Yeah. Hey everyone from rainy London today. Really sad by the missing of DeFi summer, to be honest, but I'll still go on with my sadness with the presentation. So to introduce you OI Network is a Web3 mobile platform as an X2Earn aggregator. What we basically do is we allow users to trade their precious time and efforts for money and access to easy and rewarding experience in different gigs. Kind of stepping back, why we created something like that. Ponzi or not, Axie was one of the biggest waves in terms of bringing people from Web 2 into Web 3. And it was one of the most used applications at the time with roughly 3 million monthly active users. And that is compared to current roughly 1 million in Uniswap. So the to-earn activities is what Axie kickstarted, and it is still one of the most exciting things for Web3 users. And we are capitalizing on that. But X2Earn by that point is quite controversial and it has many drawbacks because you have a high barrier to entry, high costs of NFTs you have to buy. It's unsustainable. You know that it will go down at some point and you might lose a lot of money, and it's exploitable by those who join early. But X2Earn can be easy to access and can be creating value and can be masterable by the skill set you have. And that's what we're trying to create here. OI Network is an aggregator mobile app in which you will have different to earn activities for different goals. The first two that we are launching is social to earn and validate to earn. Social to earn is you could say crowdsourcing of influence on Twitter for brands, where they can post specific campaigns to boost the growth of their content or their media, while users can connect their social accounts, can validate their accounts on Twitter, get a value of their account based on how much engagement they have, subscribers, likes, etc., and do the gigs such as like, subscribe, and get easy rewards on that. Validate to earn is where users can validate certain tasks if they were done or not, and get rewards based on that. In the future, we will launch things like test to earn, where you can test an app and earn automatically when you submit feedback. So any task that can be validated as a started and ended on chain can be created within the app that we will have and can be earned on. And the audience for this that are interested in earning any $5 or $10 a day extra is huge. And this is what it will look like in interface. And as of now, where we are is we are at the Alpha 1, already testing it and editing some mistakes or additional features. And we're releasing Alpha 2 in 2 to 3 weeks for users inside our community, which we've been already building out for a few months. We're releasing a beta in December.
Alexei, where you're coming, if judges allow you to spill over into the Q&A session, it's up to them, but they have to ask specifically. Thank you.
Do you have any questions, or would you like to hear some more? What do our judges decide?
Yeah, I have a question. Alexei, how does OI make money?
So the way OI makes money is we have a few revenue streams. One of them, and most, I think the biggest one, is the reward pool fees. So you post a gig as a brand or a company, and we are taking a share of that pool. Let's say it's $100, we will taking a share of that. Then second thing is SBT. So as I mentioned, users will be able to verify their digital identity, so the value of their Twitter account. And let's say their account grows, becomes bigger, so their value is more. So they will have to reevaluate. They will have to mint a new non-transferable NFT so that they can earn more money. We will have some advanced feature fees, like put your gig up in the feed, like boosting of this gig. And then we'll have different distributor fees as well when other entities can create modules to earn modules within our app, and we will get fees for that.
So I have a question. Where do the fees come from? Where does this, all these, I mean, because I see a lot of things in here around growing social networks and things like that. Who's paying, who's the payer on the other side?
So payer on the other side is a Web3 or a Web2 brand desiring to, if it's a social to earn module initially, it's a brand who wants to grow their media presence, media growth. Because if you think about it, on most Web3 brands try to promote themselves on Twitter now, but Twitter ads are useless because if I see a ad on Twitter, I think it's scam. If it's an influencer promotion, it can 50% chance in scam. But if it's your friend who posts about it, most probably you'll check it out. So it's a more effective content promotion through users, I'd say. And brands would be doing that, kind of crowdsourcing it initially. But then if it's test to earn, for example, any Web3 or Web2 brand who wants to crowdsource testing can do it automatically through the platform as well to get feedback on their apps.
And all of the fees go through the platform, and that's how you're able to take your percentage.
Yeah, the way it works is we will have a token, or the main token, which they have to buy, and they have to kind of set up a campaign with that token. And that token then is distributed to those who participated in the campaign and get the reward.
So why are you using a token? Why not just use USD?
Well, that's where the value of the kind of the project can grow as well. If the token is in the higher demand, then the value of it grows, because of course we will have additional mechanisms so that more money is coming in than coming out with additional activities that you have to do, like invite a friend to kind of withdraw the money, etc.
So is the token an equity stake as well as a means of payment? Is some kind of equity stake or some kind of claim on future revenues?
So no, it is not a claim for future revenues. The token is specifically used for a few utilities: to mint the digital identity and reevaluate it, to vote in the future for specific initiatives within the kind of the company, to spend on reward fees within those gigs for companies. So let's say I'm a Web3 brand, I don't know, a Sandbox, and I want $1,000 for a campaign to boost my growth of the content. And I buy the token and create this campaign. Yeah.
Any other questions for Alex, Oleg, Alexei? Thank you so much,
You're one
Alexei.
of a few who
really cool.
nailed my name from the first. But well done.
Excellent. Perfect. I do have one quick question because I'm very interested in identities in general. How do you plan to validate your customers? Is that just simply as long as they have access to the Twitter account, or I can log into my mom's Twitter account and be validated, or how are you actually confirming that the person who's validating is who they say they are?
Yeah, good question. So initially, if we're talking about the social to earn module, yes, you connect with the Twitter account and you mint a non-transferable NFT, so SBTs, kind of soul-bound token, that will represent the value of your account. You cannot transfer it to anybody. You've done it, that's yours. But in the future, with more different gigs, with more different earn activities, you will have a digital identity connected to you. So if you're testing different apps, if you have specific skills like design or whatever it is, it can be bound to your account via this non-transferable NFT.
And does this live on a decentralized network, or are you guys protecting all of these IDs?
Yeah, so those NFTs go straight away into the wallet that you've connected. And so you are the owner of your identity, and it will be used within different activities to earn activities.
Any vault?
Say again?
Do you have your own specific vault, or just any NFT wallet can hold this soulbound token?
So we will have a wallet built in the app. So you will have a built-in. So that's why we're trying to onboard more Web2 users into Web3 so that it's easy. You install an app, you can use it with the wallet built in. But if you don't like using it within the app, we all know that you can connect any wallet to any specific wallet provider like MetaMask or whatever
Very
it is,
cool.
whatever the
Thank you
chain
so much,
is.
man.
Yeah.
Thank you as well.
Yeah. So next one, sort of in the same space, DTD, and Z. Let's hear your take on the same problem.
Ian, would love to hear any opinions, Z, that you have in general about the space and your solution, how it differs from other similar ones.
Oh, sorry, Jason.
Oh,
Jason.
Excuse me. Jason, perfect. Do we have Jason?
DTTD. It's very hard to pronounce.
Looks like we may have lost Jason as well.
Yeah. Okay, I guess that's easier for judges. They don't have two projects within the same problem space. All right, but yeah, it's good that you mentioned a social wallet. You know, like wallet for all your social media. I buy Twitter badge verification with one wallet. I buy NFT at Instagram with another wallet. So many wallets, right? Well, one is timeless wallet. So let's hear about the timeless wallet and why do we need it?
All right, good afternoon, guys. I'll be very brief. I'll break down my presentation in three separate parts. First one, let's just fly through the product itself. So this is the actual product we submitted to Apple about 14 days ago for launch. So we're in launch readiness state. Number one, this is a non-custodial multi-chain wallet. We support the top 7 EVM compatible L1, L2 solutions out there, including Ethereum, Polygon, Harmony, Optimism, Avalanche. The second thing that what's unique about our product is basically how do we accelerate the Web3 adoption? And all start with the ability for users to create a non-custodial wallet that's actually simple and secure. So this is compatible with all the existing wallets out there. So let me just show you how this works. Let's say Duke demo. I'm going to count to 3, 1, 2, 3. So what's happening right now is basically we're creating a non-custodial wallet where the private key is actually secured on your local device. As many of you probably already know this, many of us who is a modern day smartphone already has a kind of a hardware wallet built in. So we're putting the private key into the secure enclave. And with that being said, you can also have the option to use Google Authenticator, the end-to-end encrypted iCloud to back up the private key in case you lose access to your phone. And we're also implementing multi-party computation for social recovery. So security is made simple and secure. The second thing I want to really showcase is basically the ability to create a decentralized identity and on-chain reputation using several of the protocols that we've been working with. One of them is DNA3. So this is kind of where you can actually create an on-chain identity where you can go from 0x hexadecimal addresses to a place where you can actually create a visual identity that's soul-bound, right? And you can easily customize all the kind of the very different things you can do with your on-chain identity. And this is not just any particular NFT. This is a dynamic NFT that actually will evolve as you have more interaction both on-chain and off-chain. So it's a dynamic NFT. And let me just show you how this works, right? You can create an identity and then you can mint this directly within a wallet platform. And the more kind of a interaction you have within a wallet, this NFT will reflect all the different interactions that you have. So it's being minted right now on Polygon. And while this is being minted, I want to showcase one thing that is also unique about what we've been building, which is the social component. We actually are creating the third generation of social, which is the ability to create a wallet-to-wallet communication layer. Now that the wallet address is similar to your email or your cell phone number, this is the ability for you to create a kind of online identity where you can have a one-on-one communication, or you can also use a way to send messages or send crypto tokens, right? Let me show you how easy this is. I'm going to switch over. Let's say I want to send a token to someone. And this is done directly on chain, right? Boom, there you go. And I can obviously send messages if I want to. And then there's also various other kind of interaction that we've been enabling. For example, if you want to do any kind of an on-chain DeFi related activities, well, thanks. Happy to answer any more questions in the next 5 minutes.
Awesome.
I think, Javi, you have a
Oh, I will definitely have some questions, but let's let our actual judges have the floor first.
Z, are you saying that you basically have a large meta soul-bound NFT wallet that you can then segregate into varying kind of smaller wallets beneath that, and based on moods, et cetera, and just have those exist? Or do they go anywhere? Can you, once you mint them, do they go away? I mean, it's all tied to this one meta kind of soul-bound? Because the soul then has to travel into the other wallets depending on mood, right? Is there a limit to that? I mean, where's that space coming from? How do you deal with that as people start? Because I could have an unlimited amount of moods probably.
Yeah, so that's a really good question. So I think there are actually multiple layers and components to this, right? The address obviously is permanent, it's fixed, right? It's on the ledger. And then some of the things that actually that evolves with you are, for example, the apparels that you have. By the way, all the different apparels, the things that you can put on your avatar, those are NFT themselves. So let's say you're purchasing a concert or online event, a POAP, right? Those actually would be reflected on your avatar itself. So the concept is very similar to the idea of patina. In this case, it would be digital patina. It will evolve with you, right? So, but the address itself, the name, one of the partners that we have is Unstoppable Domains and ENS. So the name itself is also fixated to the avatar. So there are certain things that are soul-bound, and then there's certain accessory on top of the soul-bound that's actually evolving with you.
And are you building in notifications here, or are you partnering with like Notify or EPNS or somebody else to kind of like ping people on this aspect of notifications?
So I'll give you a very verbose answer. So we have integration with both Notified, Dialect, and also XAMPP. So because the underlying architecture is what we are doing for the past 7 months from an engineering perspective is a thin platform for fat protocols, meaning we have about 57 protocols integrated into our platform, including 1inch, the various different DEXs, and also some of the DeFi protocols. So the idea is, this is really composable idea, but basically we're abstracting away all the complexity with the technology itself. And then just a little bit about my background, spent 10 years at Google working on Chrome and Android. So the idea is we want to abstract away all the kind of the engineering complexity and just really kind of focusing on the user experience, right? Because in my opinion, technology is actually the easy part. The hard part is actually the product user experience.
So that is a great lead into my question. Actually, I have two. One, who is your ideal user? And secondly, what exact problem are you solving for?
Yeah, the ideal customers for now is B2B. We're targeting Web3 builders. So if you have an NFT project, you have a DeFi protocol, you have a DAO project, right? You have layer 1 and layer 2 project. We're encouraging everyone to build their kind of a social network directly within this wallet platform. The idea is basically we need to move away from Discord, right? We need to have an indigenous community building tools for Web3, as opposed to ladder up using Web2 technology for Web3 kind of community buildup. So that's kind of our target demographic.
Okay, so B2B.
B2B, that's correct.
Okay. And so you're solving for basically what you think is a lack in the communication among, that's available now.
That's exactly it. And then thus far, we, for example, Duke University is actually one of the target university campus that we're targeting. So we'll have about close to 30 university blockchain clubs that have integrated into our platform. And then we also have layer 1, L1, L2, DeFi games and NFT projects are integrated into our platform as well. So we're basically, I think in the next 12 to 18 months, we're heavily competing against Discord. We are building a native tool for Web3 project builders.
Well, a little more than a minute time. So Javi, I think that's.
Yeah, I had just one very quick question in terms of what happens if I lose my phone?
That's a really good question. So I highlighted in the beginning, there are 3 ways you can actually recover your device, right? Using the Google Authenticator, using the iCloud end-to-end encrypted cloud backup, or use the MPC multi-party computation to back up to retrieve your private key in case your phone gets stolen or you lose access to your device.
So at that point, I would have to centralize my private key with Google or Apple.
No, there's actually all 3 solutions are non-custodial because the Google Authenticator is actually asynchronous. The end-to-end encrypted iCloud, that's probably the only one that's centralized, but you control the private key. And MPC by definition is decentralized, non-custodial. Yeah.
I'm sorry.
That's a really good question.
NPC was?
Yeah, multi-party computation. In case for you guys are curious, is imagine Lord Voldemort and Harry Potter. The ability for him to split up his souls into 7 pieces is why it took 7 books and 8 movies to kill him, right? That's exactly how we're using MPC. Split up your private key into n number of pieces so that in case you lose your phone, you can actually recover it.
Please.
A tip for you, please don't use that analogy with investors.
I was going to say the opposite. I loved it, man. That was good.
Oh, really?
Yeah, dude. I've tried to explain MPC at IBM for years, and that's a pretty good one. I don't mind it, man.
Appreciate it.
Yeah. Just goes to show you that each judge has a different opinion and you never know what you're going to get. Sometimes you just got to get lucky. And speaking of luck, Sergey, do we have any more projects to go? Or are we now lucky enough to
of course. We have one long-awaited contestant, and to just prompt to the next project. There are stocks that become memes, but there are memes that can become stocks. So Eric is gonna tell us how he's gonna create a new revenue stream out of your favorite memes. And FTX gave a lot of
meme content
recently that you can capitalize on. So 3 minutes, started.
Yes, do you hear me okay? Just checking audio.
Yeah.
I can hear you now.
Okay, thank you. So yeah, my name is Eric. I'm the CEO and the co-founder of Meme Market. A meme market is like a stock market for memes combined with a meme crowdsource platform for brands and content creators. This chart here measures the number of seconds that people watch a typical video ad on Facebook. The same chart generally applies industry-wide. Engagement with ads is typically measured in seconds, 5 seconds, 10 seconds, etc. This is the length of time that people are forced to watch crappy ads. And that's the first problem. The first problem is that most ads suck and brands know it. The problem is that this chart you're looking at measures brand engagement with those ads in terms of seconds, not in minutes or in hours. People don't want to look at ads. Now, 54% of Gen Z millennials look at memes every day. The Google search term for meme marketing has been on a one-way upward trajectory for 12 consecutive years. So welcome to meme marketing. These memes are a form of brand engagement. Now, YouTube and Instagram have enabled hundreds of millions of video and image content creators to monetize their work, but not meme creators. Facebook, Twitter, Instagram, many instances have blocked meme creators from realizing their full potential. We know that from our own experiences. And this kind of outlines the biggest problem of all, is that meme communities are huge, but they're not being taken seriously. Imagine what it was like for Brian Armstrong from Coinbase in 2011, trying to convince people that Bitcoin is important. It's how I feel as a founder, trying to talk about memes as a business. It's a big business. The most expensive single meme image right here now today in today's valuation is the Doge dog. You probably recognize it. Current retail value is somewhere around $17 million for the one single image after the crash, not peak price. This is after. Meme coins in crypto have been able to sustain billions of dollars in market cap valuations, and meme contests generally exist on pretty much every Discord server out there. If you probably know what I'm talking about. So how it works generally, brands can crowdsource meme creation with meme contests and meme quests. Content creators then create those memes. And then anyone can play in our meme stock market game we've been doing on Reddit for 5 years. So generally, when you take memes and a meme token and combine it with meme marketing for brands, you kind of get a new industry. When you take memes and a meme token and combine it with a meme stock market game, like we've been doing on Reddit for a long time, you get a true like degen crypto experience. And when you take a meme stock market and combine it with brand marketing, in my opinion, you get defensibility in that new industry. I built my last company to a team size of about 50 people, and then I sold it. And then
I'm Bhargav, the CTO of Meme Market. Built my last company to 50 million active users and sold it as well.
Moses is our chief meme lord, and he's been building meme accounts on Instagram and Facebook for several years and doing meme marketing full-time for brands with over 15 million meme followers on his accounts. Couldn't join us today. And we generally look to generate revenue in two ways. There's the fees to brands from our meme crowdsourcing, and then there's transaction fees on our meme stock market game, which I can explain later. 800 grand in soft commits, raising 2 mil. Thank you.
It's important to tell how you generate money.
Do we have any questions?
So many questions. So basically what you're doing is you're crowdsourcing. I get the crowdsourcing of the memes for ad spending. I get that part of it. Where does the markets come in? I mean, you're implying some kind of secondary market. What is this secondary market? Is this just for the NFTs?
So the meme stonk market, which I think you're referring to, is it's a popularity market for memes that we've been doing inside Reddit under the subreddit r/meme economy. We've been doing that for about 5 years or so, which is it's just a popularity market. People are issued meme tokens inside the subreddit. It's a bot that runs just inside that ecosystem, and you can buy and sell votes of popularity using those meme tokens. Now, if you can predict which memes are going to go viral before they do, and if you can also predict when memes are going to hit the end of their virality, because why do some memes go viral and some don't? This is the whole game. Then you can essentially do better in the game and increase your portfolio value in the game sense. There's no NFTs, there's no fractionalized ownership. The IP for that is nearly impossible based on like the extensive work we've done in that field. So it's strictly just a popularity game for fun. There's 1.6 million people on that subreddit right now. and it grew by 200,000 people just this year. So that's what the stock market is.
Okay.
Any other questions?
I have 3 minutes allotted to meme market to answer questions. Frank, do you have questions? I guess it's self-explanatory.
Yeah, I do have one question. As someone who has been a part of or has seen from afar these meme competitions on Discord and Reddit, what have you, I would say that a lot of them occur mainly because it's free. I mean, I don't have to pay to vote. It'll be interesting to see who would like to pay to vote, because then at the end of the day, am I incentivized to guess on which meme is going to become viral? And does it only need to become viral within the platform, or does it also need to become viral within like the greater community? I would dare to say that the majority of really incredibly viral memes were not planned or created as part of a competition. So I was just wondering how you tie those valuations together.
Yeah, totally. So first of all, the memes to vote doesn't cost physical money per se. Any content creator in the meme world can come to the site right now. We're live on Polygon testnet, and they can create memes as through quests or through meme contests and earn free meme tokens as a result. That's how we pay our content creators, or we will be, is through the meme tokens. So we give out meme tokens for free for content creators, and secondary markets determine, what the value of those tokens happen to be at that given time. So that's how we work with payments. And so once you have meme tokens for free, then you can use those meme tokens to cast your votes in the stock market. Now, because they're secondary markets, it does mean that people probably will end up buying tokens from secondary markets in order to engage in the popularity market, a game that we run, sure. But in terms of a core content creator or a meme enthusiast, you can come on the site right now and we'll give you a whole bunch of free tokens. If you follow us on Twitter, we'll verify that through our automation on the back end. We'll give you some tokens. Come play in the meme market. We want it to be a free, fun, frankly, kind of educational game for people to learn about the emotions in the market cycles. That's how it was designed on Reddit, and we want to bring that here. Now, the second question about meme instigation, and is it healthy to do it with monetary incentive? I mean, we've done several meme events with 12,000 alpha testers, and we found that engagement is about 1.5 hours per participant when they're scrolling, engaging, creating, voting, commenting, sharing, discussing these memes. So we measure our brand engagement in hours, not in seconds like the typical market. And the memes, well, I mean, I find them kind of funny. Everyone to each their own, but they're sometimes pretty good memes.
Absolutely, but I'm envisioning you're creating a meme token. For example, a party will want to have a meme about a specific, like Corona, for example. And then the only part that seems to be missing is just why exactly am I, as a third party, going to buy this meme token if I'm not participating, just on the speculation that the token on the external market is going to go up, just because people are correct and tokens are being traded in a game and some people are being given tons of these free meme tokens. I don't know why, as an external investor, I would want to hodl to these meme tokens. Please elaborate. I would be.
Yeah, I mean, yeah, absolutely. I mean, popularity markets exist in different realms as well. There's several. Like, why do people engage in any sort of a game or at all? Right? It's fun, and if people love memes, which the vast majority of Gen Z millennials do, then this is a fun way to interact with one of your favorite things. And that's a pretty big incentive for when we're talking about any game or any popularity market at all. And that's a market that exists already. We're just doing it with memes.
Yeah, absolutely. Again, I have no doubt and we're out of time here, so I'll have to follow up with you later, but I have no doubt that the people do enjoy playing the game. I'd just like to hear a little bit more specifics about how external participants are going to profit from it. Thank you so much, Eric.
Thanks.
Thank you. Yes, please share your screen so we can see all the participants. And it's really time to announce the winners, right? We didn't miss anyone, so.
Speak now or forever hold your peace.
No, we don't miss anyone. Let me see if we have. So we're missing few.
Let's get our last few votes in, and we will tally down the results.
Yeah.
Get everyone going home. Thanks again, everyone, for another successful pitch competition. Some very cool progress.
We don't have the winners yet, so we're not thank you there. The job is not done. So maybe Jamie, Adam, Frank, some debrief. What do you like in terms of the project? What's your favorite?
So with me, I'll speak first because I'm the first one in line here. I see myself. I really liked the idea of the futures. And maybe it's because my background in finance, but it seemed like a lot of these, I don't know, are a little bit solutions in search of problems in my mind. But that one kind of struck a chord with me. I like the idea of people being able to sell things forward, sell crops forward. I like the idea of people being able to kind of hedge themselves by buying things like that. I know most commodities. I mean, there is a robust trade both among speculators and hedgers in all kinds of commodities that are farmed and that are mined and created all over the world. But I really like that one. I think that one has real legs to it. I can see something like that occurring. I think some of the critique that I gave around, genericizing it a little bit would be necessary, in particular if you wanted to try to create a robust market in it. But I really like that one.
Mm-hmm. Yeah, thank you, Jimmy.
Awesome.
Yeah, I'll go. I have so obviously Ichi's portfolio company, love what they're up to. Big problem, and that's why we're work with Brian. It's incredible. I have my hat over there. I really love memes. I don't know enough about advertising spending, so I really want to learn more about this. But I'd say for me, Timeless Wallet was really intriguing. I think this idea of what we're going to experience with money now will be money becomes social. Money's going to become fun. Money will have a personality. Money will have a mood. I mean, this just makes sense. Kids do this in Roblox all the time. Feeling up, down, sad, left, right. So I think they will have specific wallets that will they'll do on rainy days, or if they go into a party, right? Hey, we're doing our party wallets tonight, whatever. You can have that allocated. Parents can can watch that wallet, et cetera. So that to me is really intriguing. I hadn't really thought of that, but when I saw it, it just made sense. So that's mine.
Yeah, I'll echo Adam on that one related to a timeless wallet, but also as far as meme market goes, I think there's a lot more analytics that can be done through the background, and also potentially monetizing those backend analytics to understand what's hot in the market, what's working from a value capture perspective and whatnot. So the behavioral econ nerd in me was really kind of geeking out to understand how you can better leverage some insights that the meme market product can generate. So that's my take.
Frank, it's surprising. If you could see my notepad right here, I wrote behavioral data on that one. It's
right.
Like, I want that behavioral data. Really? You have thousands of people doing this. This is where they're spending their time. I want that data on those people.
Yep.
I know for a fact.
All right. Hey, we need to commemorate that and probably create a meme out of that. So we need to take a photo.
See if we can get the whole group there. There we go. Thank you so much.
Yeah.
All right. We're going to upload that now to the meme market and hopefully goes to the moon.
All right. Let me check our voting system. I think, Jimmy, we are missing one vote from you. Let me refresh and see. Yeah, we're missing a vote on Aspis from you.
You know what? I don't have the ability to vote on that one.
Huh. Can
I don't
you
know
just
why.
Can you refresh?
I can, but that's dangerous too. Oh, there you go.
Okay.
Should have everything for me.
Now the votes are visible. I'm gonna close the voting and announce the third place. So I would like to congratulate Meme Market for the third place. Congrats. Let's get this behavioral data. And then, well, I was too fast to announce that. We actually have 2 first places.
Correct. We have a 2-way tie for first and second place.
Yeah. So
we're gonna have to bring them back for a sudden death pitchathon.
So that's Timeless Wallet and Ichi.
Congratulations, Timeless Wallet and Ichi. You will be our co-winners of this month's competition. Congratulations,
Thank you, guys.
Ichi. Definitely got bonus points for presenting in person. Just kidding. But everyone gets a trophy. Correct, Adam? Thank you so much. It's always great to just get together as a community, continue to pitch ideas, continue to looking into the space, trying to find new applications for this technology, educating our customers on this technology. And kind of like Dr. Jimmy Lenz was saying, let's find solutions and let's find problems instead of solutions looking for problems.
Yeah, good. Let's reconnect in December, and our winners will go to the next stage US-wide competition. And our previous winners were already seeing checks from Y Combinator. So let's hear some more winning stories from our pitch winners.
Yep, I should be following up with Leo later today to find out how that's going. So until next time, everybody, again, thanks for joining us. Thanks again, big thanks to Sergey. Thanks to everyone who came. We'll have you next time. Looking forward to it.
Thanks. Ciao, guys.